Hello and welcome to my channel, where I share my insights and analysis on various topics related to investing and finance. Today, I'm going to talk about a very interesting question. Is it the right time to buy natural gas futures? Natural gas is a fossil fuel that is used for heating, cooking, electricity generation, and industrial purposes. It is also a key component of the energy transition, as it is cleaner than coal and oil, and can complement renewable sources like wind and solar. Natural gas is traded on futures markets, where buyers and sellers agree on a price and delivery date for a certain quantity of the commodity. Natural gas futures are one of the most volatile and unpredictable markets in the world. They are influenced by many factors, such as weather, supply and demand, storage levels, production issues, geopolitical events, and more. Natural gas prices can fluctuate wildly from day to day, week to week, or month to month. This makes natural gas futures a very risky but also potentially rewarding investment opportunity for traders who can anticipate the market movements and manage their risk accordingly. So, is it the time to buy natural gas futures? Well, there is no definitive answer to this question, as different traders may have different strategies, time horizons, and risk appetites. However, I will try to give you some information and perspectives that may help you make your own decision. First of all, let's look at the current price and trend of natural gas futures. As of April 6, 2023, the May 2023 contract for natural gas futures was trading at around $2.035 per million British thermal units, MMBTU, down 5.57% from the previous close. This is near the lowest level since February 2022, when natural gas futures plunged below $2 for the first time in more than a decade. The chart below shows the historical price movements of natural gas futures over the past year. Natural gas futures have been in a downtrend since November 2022, when they reached a record high of $9.987 per MMBTU amid a global supply crunch and surging demand due to cold weather in Europe and Asia. Since then, natural gas futures have lost more than 79% of their value, as supply has recovered from disruptions caused by hurricanes, pipeline outages, and maintenance issues. Demand has weakened due to mild winter temperatures in the U.S. and lower economic activity due to the Omicron variant, and storage levels have increased above the 5-year average. So, what are the factors that could drive natural gas futures higher or lower in the near future? Well, there are many possible scenarios that could affect the market balance and sentiment, but here are some of the main ones. 1. Weather. Weather is probably the most important factor that affects natural gas demand and prices. As we enter the spring season in the Northern Hemisphere, natural gas demand typically declines as heating needs decrease and cooling needs are not yet high enough. However, weather can be unpredictable and extreme events could boost or reduce natural gas consumption. For example, a late cold snap or an early heat wave could increase natural gas demand for heating or cooling purposes. Or a massive spring storm could disrupt natural gas production or transportation infrastructure. 2. Supply. Supply is another key factor that affects natural gas prices. Natural gas production in the U.S. has been recovering from the lows seen in 2022 due to higher prices and improved profitability for producers. However, there are still some challenges and uncertainties that could limit or disrupt the natural gas supply in the near future. For example, environmental regulations could impose stricter limits on methane emissions or hydraulic fracturing. Labor shortages or COVID-19 outbreaks could affect drilling or maintenance operations, and geopolitical tensions or conflicts could affect natural gas exports or imports from countries like Russia or Qatar. 3. Demand. Demand is also a crucial factor that affects natural gas prices. Natural gas demand in the U.S. has been weakening due to warmer than normal temperatures and lower economic activity due to the Omicron variant. However, there are some signs of recovery and growth that could increase natural gas consumption in the near future. For example, industrial demand could pick up as manufacturing activity rebounds from the pandemic-induced slowdown. Power generation demand could rise as coal-fired plants retire or face higher carbon costs. Export demand could grow as liquefied natural gas, LNG, terminals expand their capacity and global markets recover from COVID-19. 4. Storage. Storage is another important factor that affects natural gas prices. Storage levels reflect the balance between supply and demand over time and indicate how much cushion there is in the market in case of unexpected shocks or changes. Storage levels also affect market expectations and sentiment, as traders may react to storage injections or withdrawals that are above or below average or consensus. According to the latest report from the Energy Information Administration, EIA, as of March 24, 2023, working gas and underground storage was 1,853 billion cubic feet, BCF, which is 31.3% higher than last year at this time and 21% higher than the 5-year average. This represents a net decrease of 47 BCF from the previous week, which was slightly above the market expectation of a 44 BCF drop. Natural gas storage levels have been above the 5-year average since November 2022, when they reached a record high of 4,009 BCF. Since then, storage levels have declined by more than 2,100 BCF, as withdrawals have exceeded injections due to high demand and low supply during the winter season. However, storage levels are still relatively high compared to historical norms, which implies that there is ample supply available in the market and that prices may remain under pressure unless demand increases significantly or supply decreases unexpectedly. So, based on these factors, what is my outlook and recommendation for natural gas futures? Well, as I said before, there is no easy answer to this question, as natural gas futures are very volatile and unpredictable. However, based on my analysis and research, I have a slightly bearish view on natural gas futures for the next few weeks or months. Here are some of the reasons why. 1. I think that weather will remain a bearish factor for natural gas futures, as we enter the shoulder season when demand is typically low and supply is ample. Unless we see some extreme weather events that boost heating or cooling demand, I expect natural gas consumption to decline or remain flat in the near term. 2. I think that supply will remain a bearish factor for natural gas futures, as production continues to recover from the disruptions caused by hurricanes, pipeline outages, and maintenance issues. I also think that environmental regulations and geopolitical risks will not have a significant impact on natural gas supply in the near term, as producers have adapted to the new rules and markets have diversified their sources. 3. I think that demand will remain a neutral or slightly bullish factor for natural gas futures, as industrial, power generation, and export demand may increase slightly as the economy recovers from the pandemic-induced slowdown. However, I don't think that demand will increase enough to offset the excess supply and storage levels in the market. 4. I think that storage will remain a bearish factor for natural gas futures, as storage levels are still above the 5-year average and will likely increase further as we enter the injection season when supply exceeds demand. Unless we see some significant draws from storage due to high demand or low supply, I expect storage levels to remain high and put downward pressure on prices. Therefore, based on these factors, I would not recommend buying natural gas futures at this time. Instead, I would suggest waiting for a better entry point or looking for other opportunities in the energy market. However, this is just my opinion and not financial advice. You should always do your own research and analysis before making any investment decisions. I hope you enjoyed this video and learned something new about natural gas futures. If you did, please like, share, and subscribe to my channel for more videos like this one. Also, feel free to leave your comments below. I would love to hear your thoughts and feedback on this topic. Thank you for watching and see you next time.